IPOs have started to rebound from 2023. I love talking about this topic with two former investment bankers from Goldman. We are still well below where we were, as this chart shows, last decade. How do we look at the IPO market today when constructing portfolios? Adam, let's start with you.
Well, look, I'd say there's a lot of different factors that are going to impact the IPO market. Obviously, it's investors' willingness to invest in initial public offerings, but you've also got a dynamic where private equity-owned companies and they're a little long in the tooth with how long they've owned some of these assets. These private equity funds have a finite life, and they're probably looking for exits. And with the although we're talking about rates going back down now, but for the last couple of years, rates have spiked up, making it more complicated to finance, an M&A transaction. And though the IPO market, if open, is an alternative to monetize some of these assets for these private equity firms. So it doesn't surprise me at all to see it ticking back up.
I think there was a lot of excitement for the back half of 2024 in the IPO market. And then we had August happen, and the sell-off in August created some volatility, and maybe some of the potential issuers got a little weak in the knees. We're hearing that there's been a delay in filings, and if those filings don't get done here in this week or so, they're likely going to get pushed to 2025. So I think the expectation is 2024 is kind of another slow year, but eventually all that additional money that has been kind of locked up in private companies has to come out at some point, as long as there isn't just an enormous amount of private capital that's raised and they just keep recycling the assets amongst themselves. We think in 2025 and beyond, there should be a pretty dramatic recovery in IPOs.
And what are the implications then for investors?
Well, one of the implications is we're seeing there are far fewer companies to invest in today than there were historically. And that creates a bit of a dynamic, especially when so many investors are focused on index investing, where you see a lot of capital flowing into a handful of companies. And this is, it's a dynamic that's driving a lot of things. I don't want to say it's driving the IPO market, but it's definitely influencing the IPO market as companies that aren't necessarily the Magnificent Seven or at the top of the market may be feeling they can't get as good of a valuation in the market today as they can get in the private market, so they stay private for longer. That keeps fewer opportunities available for a broader swath of the investing public, as the only people that do have access to these private opportunities are accredited investors that have a certain amount of wealth and income. So there's a dynamic that definitely regulators should be looking into, as it shouldn't be considered a handicap to be a public company. There has to be some benefit to tapping into the markets, as these markets are what have kind of created the great economy that we have here in the US.
And look, whenever you have a theme really take hold of the market, and the companies that are already publicly traded that access that theme hit valuations that are very lofty. And of course, I'm talking about AI and companies like NVIDIA. There are a bunch of private companies that play in that space that think this might be a great opportunity to go public at a very lofty valuation and raise a lot of capital to fund further growth of the business and to allow some of the original investors to cash out. So this is not the internet bubble. This is not 1999, 2000, but a similar dynamic where back then, if you were a company that used the internet, if you were an internet company, you wanted to go public because valuations were to the moon, and at a lower, this is a scaled down version of that. But if I was a private owner of a company that was playing in the AI space, I would be calling my bankers every night to say, when can we go public?
So Adam, as a former banker, would any of your guidance hinge on the potential outcomes from this election, particularly around potential changes in the tax code? Would it speed up the decision-making process?
I mean, look, of course, you have to think through taxes. So any significant change that impacts how capital gains is taxed, how dividend income is taxed, anything that changes how we think about investments is going to have a knock-on effect on all kinds of things, including decisions on whether to go public. It may be the private owners may say, hey, this new tax code, I don't want to monetize just yet. Or it could be, I'm in a race to monetize because in 2 years, this new thing is going to go into effect. And if I don't if I don't get public and monetize some of my stake before then, I stand to lose some money, to the IRS, whatever it is. You have to, but I don't think you can make it. I wouldn't make any decisions today based on that because we have no idea what the change could be.
And the other issue is these IPOs are generally a multi-period realization process. Seldomly do you sell 100% of the company at once. Usually they'll sell, anywhere between, 5 to 20%. They'll see how it trades, and then the rest will come out over time. And in many situations, management and the previous owners are actually locked up and prevented from selling for some time to make sure that they support the share price. So, as Adam said, we don't know what's going to happen with tax code next year. And we definitely don't know what's going to happen to tax code in like 2027 when current IPOs might actually be realized.